Hey, greetings everyone. How you doing? I hope you're good. Yeah. So this is today's Thursday, 4th of June 2026. So this is my trade analysis. I've been on this since on Tuesday. If you check from my last video, you will notice it. So this is it. Aside from your strategy, there's also one thing that is missing. That's the time, the section of your trading. I trade US30 and NAS100. Fine, you can get your trade at any time you want, depending on the strategy you are using. But the best time to trade this pair, they are the New York section. That is when the most move happens, and that's the best time to trade this section. So I'm trading that I trade fair value gap. I trade other strategy, but my most is the fair value gap. So this has been my fair value gap from I think weekly time frame. Yeah, this year is the fair value gap from okay, no, I'm not. There's a fair value gap here on weekly time frame, and there's a fair value gap here on daily time frame. So you can see the fair value gap on daily time frame. So hoping to trade from this zone, but I use 4 hours, like I said, but I just want to mark out every 4 hours gap that I have, every FVG gap that I have, so that when market are reacting on those zones, I will not be confused as what is happening. So that's why I have this locked in. And then here now, I have another fair value gap here. Yesterday that I was actually waiting for, which was this long one here. But what happened? Usually, I wait for a close of the first candle that tap into the zone. So this was the first candle that tap into the zone. This candle here. This was the first candle that tapped into the zone. Then the moment I see this close, then I move to 15-minute time frame. So on 15-minute time frame, I'm waiting for my entry. But you can see that here, there was no entry after the tap on the zone. You can see that we had no reason to take this trade. You can see, right? So go back to my 4 hours. So there was no reason for an entry for us yesterday. So we could not take the buy from this 4 hours gap. Now we have a momentum on 4 hours. That's why we have this fair value gap here. And then we have another fair value gap here. Here, market has tapped into this fair value gap. This is the first candle that will tap into this fair value gap. And the market is still running. So there is nothing we can do here except to add a close. And if the candle close as a wick above and then body inside of the fair value gap, then I think we have a trade. Yeah, I think we have a trade. Then we'll now wait to and go to 15-minute time frame and see our since we are selling, so wait to see our M pattern, or we see a bearish engulfing candle, then we can look to take the sell from that point. But if this candle that is forming now closes above this FVG, we will just delete this and wait for a reaction here. And if we did not get a reaction here, we'll keep waiting until we get a reaction on our FVG. So this is how simple we trade. We don't At times you might see 3 trade in a week. At times you might see one, at times you might not see at all. But if you know what you are doing, and you remain focused, you will save your capital, and when it's time, you bring out money from the market. So now I'm still waiting for this 4 hours candle to close before I know my next move. So you can see I mark out and I do trade with the most recent fair value gap. Not because I have fair value gap here, I will now be waiting for market to come and tap into this one. No, I do with the most recent fair value gap. That is why you see my first reaction, my first POI is around this zone. This is 4 hours. So you can see my first zone is around this side. And here is where I have my other one. So I'm waiting to see if market will react from here or market react from here. So once the market tap into it and close as a wick or close as a body inside of this FVG, then I can go to 15 minutes and look for a sell, and look for a sell. So let's check NAS100. I don't trade too many pair because I don't want to get confused. So I trade just two, and that two, I stick to it. This is our monthly highs and monthly lows. So you see, we had a breakout from here, and I had a fair value gap somewhere around here. But the fair value gap was tapped into, but the distance to my TP was not much. So I just let this market go. Then this one you are seeing here, this that you are seeing here, this POI that you are seeing here is not on 4 hours. It's on 1 hour time frame. So I moved to my 1 hour time frame, and then I saw this. This was last night. I saw this for FVG last night. So market tap into it, and you can see on 1 hour time frame gave us our double U pattern for entry. You can see, but I didn't take this trade. Though, because all this happened overnight. So I just woke up now to see it. So, but I'm waiting for New York section, which is I think 2:30 p.m. New York time, and which is our that's 3:30 Nigerian time. So once it's 3:30, once it's 3 o'clock, I go back and check my recent fair value gap, and wait for market to react from any of those zones. So if market reacts from those zones, then we have a trade. But if we did not see a tap in, or we didn't see any fair value gap, then we let the market go. So that's why you see me, even when I saw this, I still did not take this trade. I did not enter because these are not my ways of trading. So you see me, I did not take the trade. So this is where I have my 4 hours for FVG. Here, right here. And then this one has been tested. This 4 hours FVG has been tested. And yes, for those of you asking me where my stop loss and my TP would be. So let me use this 1 hour FVG as an example. Now let's assume this is your 1 hour. If you are using the 1 hour FVG, it's fine. You can use any time frame, depends. So let's assume this is your 1 hour FVG and market tap into it already. Now, this is the first candle. This red candle with the wick happens to be the first candle that taps into it. Then what I would do, I would mark that candle that tapped into it. I'll mark that candle that tapped into it and move to a lower time frame, which is the 5-minute time frame, since it's 1 hour. So I will move there, and then this is you can see this is the tap, and this would have been my entry. This green candlestick, or the WD, this is forming like mitigation. You can see the way it's forming. It went like this, came back, and boom. You can see, right? So you can see the way it forms. So it depends. You can use that as your entry, and then you target the high. So this has just been the way you enter. You enter from here, and then your TP will be here, and then your stop loss will be here. So that's it. So that's if you are using the 1 hour. Then you can as well also trade your stop loss. Maybe you enter 2 position or 3 position. I don't know how many position you want to enter. Then you close maybe 2 and leave 1 or 2 to run again, and target here as your final TP, and target here as your final TP. So by now you would have locked in your profit. You'd have moved the remaining 2 to break even. So you are safe like that. So that's how we do this. All right, I will see you in my next video. Stay tuned and remain blessed. Thank you.